Good morning, afternoon, and evening. My name is Alexander William Elliott. I am founder and CEO of A.W. Elliott and Associates. We are a comprehensive financial and tax advisory firm. I am a certified financial and tax advisor and a certified pro advisor with QuickBooks Online. Thank you for joining me again. This will be part two of the things that can get you in trouble with the IRS and the consequences of your actions or non-actions. When you decide not to do something, it's a decision. Okay, this is for business owners. I want to remind you, I'll be continuing to do videos on financial subjects such as accounting and bookkeeping, investing, budgeting, comprehensive financial planning, one of my favorite subjects. So subscribe to my YouTube channel, Alexander Elliott, two L's, two T's, tax tips, Alexander Elliott tax tips. Well, let's kind of dive into this. And first, we're going to cover poor record keeping. That's a problem all kind of different ways. But let's say if you get audited, let's go in that direction. If you audit it, please don't freak out. Gather your receipts, your documents for the area, just the area that IRS is requesting. Don't volunteer any information. Go through and add up your documents and receipts, see what that number looks like. If they don't add up, then obviously you're going to owe additional money on your tax bill. Okay. But also, what you want to do is to make sure you took advantage of all the deductions that you were allowed to claim on that return. I've had situations where clients were audited. Uh, Obviously, I didn't do their tax returns, but they were audited. They called me. And anyway, I went through the tax returns, found out that uh, there were additional deductions that they did not claim. Okay. So, and what that does is reduce the tax bill. Could even give you a return if it's within 3 years. Okay. Something to keep in mind. Underreporting or overreporting business income and expenses. Okay. I can't emphasize enough how important it is to keep track of your business and income, your business income and expenses. Best way to do that is through an accounting and bookkeeping software. As you're aware, I'm a certified pro advisor with QuickBooks Online. Obviously, that's my preferred choice. It's a lot easier than doing a spreadsheet or a ledger or just trying to balance your checking account. Okay. What I like about QuickBooks Online is that your bank statement is transferred to QuickBooks software. And so it makes it a lot easier to reconcile, in their software. I do all the financial statements and it's just a lot easier, a lot faster. Okay. But again, so you don't want to or you don't want to, uh, you know, claim, claim your income or expenses over or under. Okay, you don't want to do that. But even a cash-based business, they can track your income. Okay, so you want to be careful with that, whether you're cash-based or so regular business that has a business checking account, and you're under-reporting your income and expenses. They can track that, so be careful of that. Commingling business and personal expense. I said no, no, it's a big mess. Don't do that. You want separate accounts, okay? You want a personal account, you want your business account. And what will happen is that this will overstate your expenses and income and can result, if you're audited, in additional taxes and penalties. Plus, what's the most important, it doesn't give you an accurate assessment of your company's financial situation, which is the whole reason why you're doing this. Okay. So again, This can, overstate your income and expenses. So be mindful of that. Tax returns not being filled out properly. That can cause an audit, not necessarily, but you're definitely going to get a letter. Okay. So you need to address those issues. And if your tax return is not filled out properly, it could be other areas within that, other errors within that tax return. Okay. Not properly classifying your employee. Well, there's only two. You mean employee or you mean independent contractor. So the laws have changed. So if you're going to classify, well, you can't be an employee, but if you're going to classify someone as an independent contractor, make sure you're doing that according to the IRS laws. Okay. As an example, if you label them as the independent contractor and they're a W 2, come to find out they're a W 2. You have back withholding and back withholding taxes and penalties. Could go back a year, could go back 3 years. Okay. 5 years. That's a lot of money to make up. All right. Now, there are three areas that have to be met in order to classify someone as a independent contractor. One is financial control. Does a business have the right to direct or control the financial and business aspect of the worker's job? Relationship. The type of relationship depends upon how the worker and business perceives their interactions with one another. Okay. Behavioral control. A worker is an employee when the business has the right to direct and control the work performed by the worker, even if that right is not exercised. Okay, so be mindful. For more information, you can Google IRS, understanding employees versus independent contractor designation. It'll give you more details, okay, about that. Not having the proper business entity. I've had, uh, well, if you're a solo entrepreneur, you don't need a C corp. You can go with an LLC or an S corp. An example: a C corp is double tax, even though you own 100% of the shares. So the corp is not double taxed, but you, as the owner of the C corp, is double taxed because the corporation. Well, you are a W-2 employee, even though you own 100% of the shares. The corporation pays the tax, and you, as a W-2 employee, pays the tax. I've seen solo entrepreneurs with a C corp where they could have had an LLC, which would have been more appropriate. Also, I've had circumstances or instances where a person thought they had an S corp and they had a C corp, because whoever registered the entity for you has to convert it from a C corp to an S corp, because it starts out as a C corp. It has to be converted. Okay. And I've seen situations where it wasn't. Again, for more information, just go to for more information, go to my website, awelliottassociates.com. I have some white paper there that would explain more in detail about this situation. Okay, filing a amended return. Some people think if you file an amended return that it's going to cause a audit. Nope, that's not true. But if you're going to file an amended return, make sure that you have your ducks in a row, that you have your documents, you have your receipts, because if you're entitled by law to do that, then that's what you should do. Okay. And also, another reason why you would amend the return is if you miss out on deductions that you filed on the original return. So you can amend it. Okay. So it's not going to trigger an audit. I've never had that happen. I amend people's return all the time. Never had that happen. So not to say that it won't happen, but it can happen. Now, one of the things that I do when I pick up a new business client or individual client is to go back and look at their last 3 years tax return to make sure they took advantage of all the deductions that were available to them. I'm telling you, 70% of the time, I find out that there were deductions that they did not take advantage of. Uh, and that's a free service that I offer when you become a client of mine. I go back because you can only go back 3 years to amend the return. So, and I've gotten people back a lot of money. Okay. Again, it doesn't necessarily trigger an audit. I haven't had that happen yet. So, but again, make sure your documents and receipts are working with me. I'll make sure that's correct. Fraudulent tax return and tax evasion. Again, a no. Penalties can range from 2 to 5 years in prison, interest accrued and compound over time, and up to $5,000 and 5 years in prison. I have here just asked Wesley Snipes. It was about tax evasion with him because he felt that under the Constitution, they didn't have to pay any taxes. You've heard of those folks. Went to court, says no. So I think he went to jail for 3 years, had a big fine. So you don't want to do that. And here we go again. Not hiring a certified pro versus a registered tax preparer or unregistered tax preparer. A certified tax pro can be a CPA or an EA, which is an enrolled agent, or a CTAC certified uh, tax professional. All three can represent you in front of the IRS if you have any problems. Even if you're working with a registered tax preparer, they cannot represent you in front of the IRS or in an audit. And if you're working with a unregistered, and I've seen that with professional people, unregistered tax preparer, that means that they cannot sign the return. So you're responsible for everything on there. And if there's an audit, you're on your own. You got to hire somebody like me or, to represent you. So you don't want to deal with an unregistered tax preparer. But I've seen that with a few professionals that I work with, and I couldn't believe it. So maybe they're trying to save money. I don't know what the deal is. So anyway, be safe out there. Wear your mask. Hey, I'm going to get my vaccine tomorrow. Yay! And but wear your mask, social distance, all that stuff. This stuff is for real. And we'll see you for part three. And in part three, I'm going to tell you, how to, work with the IRS and how to solve some of these problems if you want to deal with them on your own. So anyway, be safe. Talk to you soon.